Do you know how to calculate bad debts in a customer ledger? If you do not know, this tutorial is for you. So today here I'm going to show you how easily you can calculate bad debts preparing a customer account. So no time to waste. Let's get started. Okay, so today we'll follow a question which is taken from Cambridge IGCSE accounting first paper as an example to show here how to calculate bad debts. Okay, so let us have a look at the question on the screen. Hamila is a trader. Her financial year ends on 28 February. Okay, all goods are bought and sold on credit terms. Very good. Hamila provided the following information for February 2019. So here we have 5 transactions, and in the last February 27, the balance of Shafia's account was written off as irrecoverable. Okay, so the balance we'll get here in this ledger will be as bad debt, okay, which is not recoverable. Okay, so here the trader is Hamila, okay, and she has a customer. The customer name is Shafia. Okay, it is written on the first transaction. So we are doing a customer account here, okay, in the book of Hamila. Okay, so let us write here the customer name. So here Shafia account. You already know this format. This is a T account ledger format. So here we have date, detail, dollar columns on the debit side. Here it is debit, dear. So here same date, detail, dollar columns on the credit side. Okay, if Shafia is a debit by any means, will be recorded here on the debit side. If Shafia is credit in the account in the transaction, then we have to record on the credit side. Okay, very good. So let us have a look at the question on the screen. 2019 February 1, Shafia, a credit customer, owed $320. So Shafia owed. What about Hamila? Okay, so it is an opening balance. You know, opening balance will be written as a balance BD, means balance brought down. Okay, as it is an asset for Hamila, it will be written on the debit side because asset has debit balance. Okay, so let us write the date first, 2019, and here it is February 1st. So we will write here balance BD. It is $320. Yeah, so Shafia owes, that means Hamila owns this money. Okay, so this is an asset for Hamila, so we wrote on the debit side because asset has debit balance. Okay, very good. So first transaction is done. February 12, Shafia paid the balance due on 1st February by check. Okay, so Shafia paid the balance due on 1st February. So 1st February the balance was $320. Okay, this amount is paid by Shafia on February 12. Okay, that means here Hamila received money from Shafia. Yeah, okay, so we are doing Shafia's account. So here Shafia is credit. Hamila received by check, that means received money by bank. So bank is to be debited and Shafia is credited because Shafia is a giver. Okay, giver is here credited. So we are doing Shafia's account. As Shafia is credited, we have to record on the credit side. Okay, don't think about Hamila, think about the customer Shafia. Here Shafia is credited, so we record on the credit side. Okay, so let us write the date first, 2019 February 12. So we write here bank. Okay, because money is received by check. Check means here bank. It is $320. Okay, finish the second transitions. So what is your next transaction here on the question? It is on 16 February. Shafia purchased goods on a credit. List price is $250, less 20% trade discount. Okay, so Shafia purchased. So what did Hamila do? Hamila here sold goods. Yeah, so here what is the transition, what is the double entry? So here double entry is like Shafia is to be debited and sales to be credited. Yeah, so here Shafia is debited, we will record on the debit side. Okay, so here Shafia purchased. Don't think about purchase. Shafia purchased, but we are doing Shafia's account in Hamila's book. Okay, so what Hamila did here? Hamila sold goods to Shafia. Okay, so that is the reason here Shafia is to be debited and sales are to be credited. Okay, so Shafia is debit, we will write on the debit side. So let us write here first of all date February 2019. It is February 16. We will write here sales. Okay, the opposite account. Very good. So what is the value here? In the question it is written that $250 and there is a discount which is 20%, and this discount is trade discount. Do not forget, trade discount does not include in any accounts, neither in journal nor in ledgers. Okay, so this will not be included. So trade discount is here 20%. So what comes here? It is $50. Yeah, so we will not take $50. We will minus this $50 from the selling price. So actual selling price is here $200. So we will write here $200, not $250. We see many of you do not subtract the trade discount. Okay, it is a mistake. Don't forget, trade discount does not include in the ledger. Okay, very good. So February 16 is done. What is next one? It is February 18. The bank returned Shafia's check because of insufficient funds in the account. Okay, so bank returned means it is a degenerate check. Which check? The check received on 12 February from Shafia. Yeah, it was $320. So it is a degenerate check. Now what to do? Now Hamila will debit the Shafia's account and credit the bank account. Okay, so here Shafia is debit, so we will record on the debit side. So let us write a date first, February 18. So again we will write here bank, and same price, it was $320 check, so we'll write here $320. Okay, very good. What is our next transaction on the question? February 24, Shafia paid $400 in cash. Okay, now Shafia paid $400 in cash, not check, because check was degenerate before. Okay, so what is the double entry here? Hamila received cash, so cash is debited, and Shafia is a giver, Shafia is credited. Yeah, so we are doing Shafia's account, Shafia is credited, so we will record on the credit side. Okay, so let us go to the credit side. Date first, February 24. So we will write here cash, and the amount is here $400. Okay, so simple to understand. If Shafia is debit, we'll write on the debit side. If Shafia is credit, we'll write on the credit side. Okay, so you have to understand the debit and credit, the rules of account. Okay, then we finished 24. Now what is next? 27. The balance of Shafia's account was written off as irrecoverable. So written off as irrecoverable means it is a bad debt. Okay, now we have to balance this ledger to calculate here bad debt. Very good, but how to calculate bad debt here? Okay, so for this, first of all, we have to compare these two dollar columns. We have to check which column is greater in terms of value, the money. If I see in the debit column there are 3 amounts, on the credit column 2 amounts, so here I think this debit column is greater. So we'll total debit column first. So now if we add these 3 values, what we get? It is $840. Okay, this is the total of this debit dollar column. Okay, now what to do? Now we will take this debit amount to the opposite side, opposite dollar column. Okay, so here opposite column is credit column, so let us try this value here. Just copy paste for $840. Okay, very good. Now what to do? How to calculate bad debt here? We will subtract these two values, 320 and 400, from this 840 to calculate the bad debt. Okay, so if we subtract these two values from here, 840, what you get? If you say it is 120, you are correct. Okay, so this is the value of bad debt. So we will write here bad debt. Okay, now what is the date for bad debt here? It is last day of the accounting period. That means 2019 February 28. So here this is how you have to calculate bad debt in the ledger, in the customer ledger. Okay, so if you understand this surface account today, whatever question you get like this, you'll be able to prepare.